Good morning, this is Paul Georgi from Allendale. It's February 26, 2010. The grain markets this morning expected to be a little firmer here on the opening. Corn up 2 to 3, beans steady to 2 higher, and wheat 1 to 2 higher. The outside markets are providing some support with the dollar down 12, crude oil up 67, gold up $3 to $4 as we speak. Some of the key USDA reports and the economy reports this morning. First one is the existing home sales coming out here at 9 o'clock. People are watching that, and that will be a clue to how the investors may react to the stock market and some of these other markets that could in turn affect the grain markets as an attitude more than a fundamental issue. But that report's coming out. We did have some good news out yesterday. The Ethanol Association says that the ethanol plants are running at about 92% of capacity right now for the month of December. That is certainly encouraging that we're consuming our supply of corn that we've got, and that may be providing a little bit of support. However, the weather is, I would say, negative in general in South America. Some areas are the areas that were wet, could not harvest in Brazil. They're starting to dry out, and they push the rain back some, so there should be some harvesting going on down there. That could weigh on the bean market here today and into next week. There's talk again of China canceling some of their imports of soybeans. Numbers that we've crunched don't expect China to cancel very many, if any at all, because of the cheap price that they got them bought at, first of all, and they need the beans is the bottom line. The next big USDA report, March 10th, the USDA said a month ago, or actually early January, late January, that they were going to revisit the production numbers because of the amount of corn and grain that we had left in the field. It didn't get harvested, so trade is looking at that, and that should provide some underlying support in this markets as we go into that report on March 10th, because it could be a sizable amount of loss, or it could be very small. But that uncertainty is causing support in the grain markets right now. Also, to help you understand and get a handle on where this market might go, the Allendale is doing their annual crop planted acreage survey for corn and beans, wheat, and we'll run that here for the next couple weeks. You may be having somebody from Allendale call you, or if you don't, please help us out. Go to our website, log on, and put the information in. Send it off to us. It'll be very important in getting the most accurate numbers, because there's nobody knows better than you what kind of crops you're going to produce, and that would be very helpful. The technical action today, we've got support in May corn, 380, bounced off of there yesterday, and looks to be providing some support here this morning. Resistance around the 387, 87 and 3/4 area, then again at 390, 395. So from here on up to the $4 area in the May corn contract is going to run into some pretty good resistance, some selling, maybe some farmers selling up in that area. Soybeans, we've got beat up hard yesterday, although rallied off of the lows. Today we've got support around 941, then again at 930 in the May contract, resistance between 950, 960 initially, but strongest resistance is all the way up around the 975 level. Wheat is coiling here in a trading range of between $5 and $5.17. If we broke that $5 area, We'll find some initial support around 490, but it's setting itself up, it appears like here, that we could take out stops on both sides before it decides what direction it's going in. Stochastics are running around 50%, so pretty balanced market there right now, waiting for direction, waiting for a catalyst to push it one direction or the other. Also remember, we're approaching this March 1st date, which is usually a time where traders are going to look at buying this market, and I think that could be seen here today or the next few days. You got to be careful that the funds are going to come back in and look to be buying, so sellers need to position themselves so they don't get ran over if the funds do come in and buy this thing unexpectedly. The cattle trade, looks like we're through with the cash market trade this week, pretty much steady with last week. Product continues to strengthen here. Choice was up 47, Select up 13. Product appears to be at the upper end of its range, about all it can handle at this point. And that, I think, is what the futures contracts are already anticipating, that we're going to see a sharp sell-off in product and a sharp sell-off in the cash market. However, we are struggling with supply right now. The feedlot conditions, the rate of gain is well below normal, and Mother Nature continues to throw enough ugly weather at the feedlots that they don't have time to straighten out and get these cattle back on track, and that is something that you just don't know how long can it last. The weather markets are very tough to predict when they're going to end. Supplies are extremely tight. Demand is pretty decent for beef right now, and that is providing some support to the cutout value and the profitability of the packer, but the futures have already slipped back, but you've got to be very careful about selling this thing right now without any type of protection, especially when you're dealing with this weather situation. The hogs, they have held the uptrend and started higher again. Cutout values there were up 77 cents yesterday. A lot of news circulating there. U.S. trade representatives are going to be going to Moscow 1st and 2nd of March to talk about the poultry situation, to talk about the pork situation. That was constructive. That news was released yesterday and helped run this market up. Also, the Canadian Prime Minister, Ag Minister actually, said that he has put a deal together with China that will allow Canada to export pork to China, and that is certainly constructive to U.S. hogs, because if they're exporting pork to China, they're not exporting pork to the U.S., and that's been a positive here that just came out yesterday. So some good news in the pork industry right now. It looks like the charts now are headed for that $74 contract high again in the April hogs, that here in the near term, if we take that out, then you got to draw lines to find new resistance levels, but the first initial level of resistance around that $74 in the April contract. If you got any questions, a lot of exciting things going on here in the next few days, and even today. We've got the home sales report out at 9 o'clock. You want an update on that, don't hesitate to give us a call here, research department and the brokers here at Allendale. They'll be happy to answer any questions that you might have. You can contact us at 800-262-7538. We wish everybody a very successful trading day, safe weekend, and we'll talk to you on Monday. Thank you.